Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, this is Rob Clayton and I hope you had a fantastic weekend, as it's now time for our daily webinar and there is lots to talk about to the start of this week. Looking at the Australian dollar, we can see now as it continues its trek, marking its 8th consecutive climb, however still remains capped at its key level of 60-day simple moving average, which is seen around 66 figure 30. Meanwhile, the US dollar, which measures the greenback strength against a basket of 6 major currencies, remains weak at 103.96. With the Fed minutes now in the rear-view mirror, the attention turns to this week's US government January report on the personal consumption and expenditure, or the PCE, which is a key indicator of inflation that the Federal Reserve's preferred measure. Expectations are for a call into 2.4, down from its peak at 7.1 in June 2022. The Federal Reserve has been attempting to control inflation and bring it back to its target around 2%. Also, investors will be closely monitoring a series of economic data in Australia this week. This includes the year-on-year inflation data, or the CPI, scheduled for Wednesday, with forecasts indicating a slight increase from the previous figure of 3.4 to 3.6%. Additionally, updates on retail sales will also be seen, and furthermore, significant attention should be paid to China's economic indicators, including manufacturing PMI, non-manufacturing PMI, and occasion manufacturing PMI. So as I mentioned, the market is still focused to that top side, with the indicators bullish, with the RSI married to the MACD and the ADX supporting an upward trend. Let's see if the market can clear that level 66 figure 30, as it would widen the path on towards 66.75 to 67.35. Any pullback expected to be shallow around 65.25. Well, since its daring up challenge of the key level of 108.7080, the euro is somewhat mixed to the start of this week, but it still holds to a bullish trend and the technicals are still positive, so therefore I won't at this point rule out further upside attempts, as the dollar is expected to decline towards 103 figure 10. If we do see a break above that level of 108.7080, it would expose the next target, 109.3540, and maybe on to 110. Any pullback? Well, we can see here the support is holding around 107.95 minor to 107.2545, where this channel holds. That was recently broken. The dollar yen still persists to the upside, even though the dollar is slightly weak. Nevertheless, I am still holding to the view that we should see a rejection from that top side area around 150.60.65 and eventually see a pullback. But we do need to see a break of 149.75 and down towards 148.80 or 148.1535. Above 150.65, a close that is in New York, would see a squeeze on towards the region of 151.35 and reassess, as the cap holds from the previous highs that we can see back in October at 151.75 to 80. Sterling still holding to a bullish bias, and I still anticipate, as long as we see a hold of 125.45 base, that the market looks destined to this challenge around 127.1525 or up to 127.65. Reassess at this topside point, as good supply did return all the way through December. Gold, well, the market took the challenge to that topside challenge, a key level of 2,038.42, and clearly held. We can see now the market is still maintaining the bullish bias, and a break above the level of 2,038.42 will see a squeeze on towards 2,000 to 51 to 56, which will prompt another reassessment from this area, with any pullback likely to be shallow around 2025. Oil weaker after failing to take out that key level of 78.50.60 is poised for a further down test due to the closure underneath 77.75 and looks towards a level of 75.45. A break there would give further scope towards 73.15.35. This seems to be a pause in the brief uptrend from this inverted head and shoulders, and overall from the broader aspect I feel the market will eventually gain momentum and look back to that topside target around $79 to $83 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report and I hope you enjoy the great start to the new week.